Hello again, everybody. Doing job there from DRFX, Forex and Trading. Taking a look back at the Aussie US dollar daily chart once again. Now, as I said in the last video analysis of this currency pair, based on the nature of the bearish and bullish waves that have been formed on this time frame over the last several months, it looks as if this consolidation setup is going to be formed on this time frame. Now, we've already had the two resistance points that would now allow us to complete and confirm that this is a resistance boundary. But we're yet to have the corresponding support points formed, with only one support point formed so far. So for the time being, we'll have to keep this support boundary as a dashed line until we get confirmation in the form of a strong support point here, a second support point being formed here, and the start of another bullish movement that takes us back to the resistance point and completes the formation of the consolidation setup. Now, the last time we looked at this, I'd pointed out that based on the movements and the rally that had taken place here, it looked as if this area could have been the area where the market was going to be forming the second support point that will lead to the rally to the resistance. This was projected to possibly take the form of an ABC rally, an ABC formation here, that will lead to a sharp rally back to the resistance. But as you can see, the market has basically changed that possibility, taken that possibility off the table, and has U-turned to continue this bearish trend. Now, what I think is possible is that somewhere in this region here, the market is gonna U-turn and put an end to this bearish momentum and eventually start a rally that leads to the formation of the second support point with this bullish wave that allows us to complete the formation of the consolidation setup. Now, what is happening here is something that takes place quite often whenever the market is forming a consolidation setup. There are times when the market will pull back, similar to what it did here, in order to create a second resistance point to complement the one that was formed at the start of the downtrend. What this does is that once this U-turn takes place and it leads to a break below the previous low here, it allows us to confirm that this second resistance point can be used to allow us to form a downtrend line. So this pullback and U-turn that took place here, it is the market's way of telling us that it's going to be forming this trend line, and that we should begin to get ready to start trading in the opposite direction, because the formation of this trend line means that whenever the market is about to start to change direction, it will use the break of this trend line as an indication or as a confirmation to us that a new trend direction is about to begin. So this sort of acts as a little heads up that the market provides for us to tell us that we should in the near future begin to look for trading opportunities in the opposite direction as the market begins to transition to break this trend line here. So this is an interesting dynamic and a unique dynamic of the market when it comes to the formation of consolidations. Breaks of trend lines on their own, even outside of the formation of consolidation, are usually strong indication that we're going to be having a trend change. But if this is being done within the context of the formation of a consolidation setup, it is even more of an indication that we should get ready to start trading in the opposite direction. So these are the little things that the market provides for us to help us along the way in showing us what it's going to do over the next couple of days and weeks. So once you're able to spot these types of movements that the market does from time to time, then it helps to not only prepare us to trade in the right direction, but to exit any short positions or to avoid trading short any at all because of the expectation and high probability that a strong U-turn is going to take place in the near future. So it helps to avoid these traps that appear to come out of nowhere, especially if you're unaware of the formation of these large consolidation setups. So knowing that the market is going to be forming a consolidation based on the nature of these waves that have been formed, as well as this interesting dynamic that takes place when the market is about to start the movement in the opposite direction, are two key elements that are very important when it comes to analyzing the currency market on the daily time frame. So this again is pointing to one of the many advantages of trading on the larger time frames, because of the ability to easily spot major trend changes and large market setups. Once we're aware of these setups, as well as the dynamics that point to the start of a possible trend change, then we're in a much better position to trade in the direction of the market and avoid common traps that can lead to unexpected reversals and trading losses. So let's wait to see what takes place in this region here. The second support point and the start of this reversal could take place at this area here, or it could take place a little lower down, creating a horizontal support boundary. So we'll either have a horizontal support boundary or an angled support boundary. So gonna be definitely looking out for trend changes in this area here. The market will start off by losing momentum and start to move sideways before eventually U-turning to provide us with a strong setup and a strong set of signals to indicate the start of this uptrend back to the resistance boundary.